But Jeremy, Sarah was talking about cyber and cyber threats and the issue about security. Don't we have similar potential threats applying to
Well, this is the yes and no. I mean,
Yes.
a non-sovereign digital currency that runs on a decentralized infrastructure, the specific attack vector that they're trying to deal with is nation-state attacks. So basically, how do you build a currency that is resilient from malicious attack by a nation-state? I would say that that's a higher bar of security than, say, can your credit card get hacked, or is my IT firewall strong enough? This is essentially nation-state grade, resistance and resilience. That's the security bar of cryptocurrency. That's a radically higher bar of security than any of our existing financial system even has.
And that's where you echo what Benoit was saying, which is that it requires the bringing together of different skill set, of different industries probably,
Sure.
and public and private players
Absolutely.
playing together.
Absolutely.
Right.
There have to be standards, right? So the World Wide Web doesn't exist in a vacuum. There's a standards body, the World Wide Web Consortium. It defines the technology. It makes it all work. Lots of brilliant computer scientists, industry members, even government, academics contribute to that. It's a pool of open intellectual property. So we need the equivalent in this space as well. And so that needs government supervisors, that needs commercial banks, that needs technology companies. It needs a lot of collaboration there. But the end goal needs to look more like the open internet than certainly what we have today.
But so it would be the governance of a public good that is available to all.
That's right. Because digital currencies are inherently global, they exist anywhere the internet exists instantly. It's inherently global, and that will certainly create challenges for countries that don't have reserve currency status, because everyone's going to want to use reserve currencies, and they're all going to have access to them instantly at zero cost. So if I'm in Argentina, I'm going to want to use US dollar coin, and I'm going to want to carry that around, and no one will be able to stop me, very likely. And so that will create, I think, challenges for governments, ultimately in their treasuries as well. But those are longer term challenges. But I think that is very clearly where it's headed. And even what we see in the recent news this week, Facebook raising billions of dollars to launch a basket global digital reserve currency that is a stable coin that can be used by billions of people around the world to transact directly over the internet. We're not talking about like far off science fiction, we're talking about later this year. So I think these are the things that are coming faster than people realize, and they're happening by technology companies and by open source communities, not necessarily from central banks and large commercial banks.
Interesting. So it's digital SDR.
I think that's technically possible and functional in the world in the next 12 to 24 months.
So I got to start off with the fact that you're wearing your banking tie and your banking suit, and you don't look like your cryptocurrency CEO.
I'm just going to go back with where is your tie?
I don't. Yeah.
No, look,
I took it off because I didn't think you'd have one. I thought it was going to be over there.
That happens to us, and kind of to answer your question, look, as Adam introduced, Ripple is a company selling software, selling technologies into banks, into financial institutions. And so we think about, we are selling into an audience that oftentimes is wearing a tie.
People are saying, well, what really is the utility here?
I just think there's a lot of noise. Look, I think blockchains are an incredible evolution, and I think many parts of the internet, many parts of how transactions happen will change because of blockchains, period. Right. I think there are a lot of examples that I see people talk about where I ask myself, and I would ask people to ask themselves, why doesn't a database work better? Right. Why isn't a database more efficient? A blockchain is kind of an expensive database. Right. It's slower than many database technologies. And I think a lot of people, they use the word blockchain as, frankly, catnip for investors. Right. They want, or for marketing, that they want to get, consulting revenue, so they talk about blockchain. Look, we have tried to be very, very focused on solving a specific set of problems for a specific set of customers. And that is around transaction banking and liquidity management, so that today, as you've heard, cross-border transactions, they are slow, they are expensive, they are error-prone. And the one cost that I think gets overlooked that people don't fundamentally understand is the way correspondent banking works is pre-funded capital sits in accounts around the world. And you have literally $10 trillion pre-funded into other banks, into other financial institutions. in order to facilitate, it's the oil in the engine that allows correspondent banking to work, and it's sitting there. And if we can reduce the amount of oil necessary in the engine, that's incredible efficiency for the global economy. That's good for everybody. If we can remove 10 trillion to a lower number, that's stock buybacks, that's dividends, that's working capital for lots of other purposes.
And talk a little bit about the speed, because XRP versus, say, the way we do this now, why is it so much faster than the normal banking transfers through SWIFT, for example?
We think about XRP as an incredibly efficient shuttler, a bridge currency, if you will, and because it's extremely fast.
Right.
So in contrast to even Bitcoin, for example, we can do a transaction for about 6/10,000th of a cent. A Bitcoin transaction today costs about $2.30 per transaction. Now, that doesn't mean Bitcoin's going to fail or something. I think Bitcoin and XRP, I don't view them as competitive.
Right.
XRP is extremely efficient for that payments solution, that payments problem we're solving. And Bitcoin's, I think, as a store of value, digital gold, as you heard from Barry Silbert up here yesterday. Today gold is worth many trillions of dollars, and Bitcoin's worth something around 200 billion. The entry point for us has been, let's go sell what we call X-Current, and this is a point-to-point, fiat-to-fiat, Bank of Cliff to the Bank of Brad.
You do not want to invest in the Bank of Cliff.
Real-time debit and credits.
Right.
So SWIFT today, there's a series of hops that things go through. It is slow, it is expensive, and this is real time, but it's fiat to fiat. It is necessary for that to work to have that pre-funded capital parked in the Bank of Cliff and the Bank of Brad.
So
it turns out you're right. I don't trust the Bank of Cliff. I don't want to store money there.
Well,
and so if I can use,
you have to say that.
What
All right.
What XRapid allows is for me to shuttle value in real time from, say, British pound to Philippine peso in real time, and I don't have to pre-fund into the Philippine peso.
So getting back to where we are in this moment of time in this sort of crypto geological time scale, the Libra deal, a lot of what we heard yesterday was that it's an inflection point, that this was a sort of, when you look at the players involved in it, it seemed to legitimize this idea, this sort of very big idea that's been around for a while.
For a lot of banks that have a lot of liquidity parked around the world, they're evaluating, okay, what does that mean? I was talking to the CEO of one of the largest banks in Canada, and they were exiting their correspondent relationship in Brazil. It's expensive for them to hold Brazilian reals, and they're like, look, we don't have enough demand, so now we're going to use a correspondent bank. Now, if they could use XRapid into Brazil, they don't have to have the pre-funded money, they don't have the expense, and they can still solve their customer's problem that need to do business in Brazil. So I think these are all examples of, it is a journey. I think that it is nascent. I will also say that I'm going to send a case of champagne to David Marcus, the guy who runs the Libra. The reason is this week will probably be the best week of signed contracts at Ripple ever.
Right. Wow.
It has been a massive call to action because, again, Facebook kind of came out and said, we don't need Western Union anymore.
Right.
Well, if you're a bank, if you're Western Union, you kind of, that's interesting. And I think the banks realize that if Facebook is going to be a competitor in this space, they can't depend upon a technology like SWIFT to compete in the marketplace.
Brad Garlinghouse, who is the CEO of the financial technology company Ripple.
I will start off by also thanking Charles, thanking Thomas, thanking Christine. It's an honor to be included. In a world where we think about the internet enabling kind of real-time, instant information, why can't we use these new technologies to build an internet of value? When we look at the current dynamic I was just talking about, the pre-funding, if the correspondent banking network requires this pre-funding, I'm not talking about a central bank level, but as much as I'm talking about it at a commercial level. And oftentimes, even when I'm meeting with senior people at various banks or financial institutions, they'll talk about their cost to fund into the Mexican peso, and they'll cite a very, very low number. But what that doesn't include is the cost of capital that's sitting at a bank there. It also restricts competition because it requires capital to get it there. Our view in the future is you don't have to have this pre-funding, and instead you can use a digital asset to have global liquidity on demand. Now, we build upon a tech stack of an open source technology called XRP. XRP originally was built by some engineers who had seen some of the flaws of Bitcoin and the challenges of scalability around Bitcoin. Where Bitcoin today, on a per transaction basis, it's rather slow and rather expensive. XRP is very, very fast, about 1,000 times faster per transaction and 1,000 times cheaper per transaction. The other dynamic, of course, of correspondent banking is some of the more quote-unquote exotic currencies, exotic corridors have been left to kind of stand on their own. And the liquidity in digital assets could be applied to actually make that much more democratized and a level playing field. Ripple's vision from the beginning really has been to apply these technologies in the same way that TCP/IP and HTTP are the technologies underpinning the Internet of Information. These blockchain technologies will be the underpinnings of an Internet of Value, where we have connected devices, we have connected information that will allow payments to flow. And as Norman was describing, if you're a large corporation moving $100 million, that's one thing. If you're a freelancer working in the Philippines doing design work for a company in London, and you want to get paid $30 or 30 pesos, Philippine pesos, that's not a transaction that can easily be enabled. And in fact, for the companies that enable that, they require the freelancer to set up an account, and they don't actually pay it out until there's roughly 1,000 USD sitting in that account, and then they would pay it out. So Ripple has come to the market with 3 products, and I will just briefly touch on them. The first one is called Xcurrent, and the reason why I'll point this out is because Xcurrent doesn't touch crypto. Xcurrent is just kind of Swift 2.0. It's a messaging framework that is much more efficient and real-time as compared to fiat to fiat. That typically is how we start working with any bank or any financial institution, is on a fiat to fiat basis. The bottom product we see down here is called XRapid, and XRapid is really where we use XRP to fund real-time liquidity. We brought this product to market in Q4 of last year, and immediately we saw the demand for that type of product from banks, financial institutions who want to open up new corridors for payments, but don't want to open up new nostro-vostro relationships and the friction and overhead that goes with that. The third product is really simply an API that allows corporates to do real-time payouts into this network we call RippleNet. The challenge here, as many of you may know, is there's corporations ranging from Uber to Amazon to less technically efficient companies. They employ hundreds of engineers that just integrate into payment networks around the world. They're building custom APIs into payment networks in the Philippines or Indonesia, into the Middle East, what have you, so they can enable those payouts. We think by standardizing on an open source API, we can make that more efficient for everyone. I think one of the reasons why Ripple has done well is we've been very focused on solving a specific problem for a specific customer, and we've been focused on that for a long time. And we've been fortunate, therefore, to get about 200 customers globally now working with us in one way or another. So I'll conclude just by saying I think the excitement around blockchain is well-founded, and it will impact many, many industries in the same way the Internet of Information 20 years ago has impacted many, many industries. But I also think sometimes that the hype gets ahead of the reality, and we need to be clear about what problems we're trying to solve, whether it's at a central bank level, a commercial bank level, or in other industries altogether.
I think in the banking system at large in many, many countries, the difference will not be between those who are disrupted and those who survive, but it will be between those who are cannibalized because they are not seeing it coming and they're not embracing it, and those who self-induce that cannibalization. And I'm using cannibalization on purpose because it's a bit of a striking, horrible word. But it's really what it means. It's you're going to disrupt your business model, you're going to change it, you're going to reduce your cost, you're going to expedite your transactions, and you're going to continue to inspire confidence because you will build that on the basis of an existing backbone, which is your bank and the confidence relationship that you've established with your customers. So that's where I see changes happening now. If you think of Circle and Ripples and all those, that's where they are active and helpful.
They've already got their bases lined up.
They're moving
elsewhere.
there, yeah, of course.
In other, Amsterdam, other parts of Europe, they've already got their sort of ducks in a row. We're almost out of time.